All right, guys, let's just hop right in. With the simple questions like what are candlesticks and why do they often fall short? While they do show price movement, meaning it's a visual representation of where price was in the past and what price currently is, they often fall short. They don't reveal how the price got there, what the price is actually doing once it gets to a specific level, or what's happening behind the scenes, right? And this is where footprint charts come into play, right? Unlike candlesticks, footprint charts actually display the total volume traded at each specific price level, and it gets broken down into aggressive buying, aggressive selling, which is just aggressive buying trades that hit the ask, aggressive selling trades that hit the bid, and it gives you a much clearer picture of who is actually in control at any given moment in the market, which is so crucial. Now, the foundation of the actual footprint charts is the DOM, right? The depth of market. We're talking about times and sales and level 2 data, which I'm showing you right here. But the footprint charts give you a much prettier, appealing visual representation of level 2 data. Basically, all this is showing you is the depth of market, all the pending buy and sell orders sitting in the market. Basically, it's what traders want to do when price gets to a certain price. And then times and sales is a real record of all the executed trades. It shows you exactly what's happening, which is very crucial for understanding market sentiment. Now, a footprint chart will actually combine this data, giving you a very detailed view of the market, not just showing price, but it shows you the story behind each price movement. Now, let's go ahead and talk about how to read a footprint chart, which is super important, right? So a footprint chart, right? Let's go ahead and skip this part and go to this. So this is a normal old candlestick, right? What you'll see on a footprint chart candlestick, right? You'll still see the high and low. You'll still see the open and close, but you'll see a couple of different things, right? On the left-hand side, you see the volume of aggressive sells, right? These are the sellers. These are all the offers hitting the bid. On the right-hand side, you'll see all the market orders hitting the ask. These are the aggressive buyers. Now, the difference between these two right here is called the delta, right? The D, the number that you'll see at the top. And the delta is a critical metric. A positive delta means that buyers are dominating, while a negative delta means that sellers are in control. Now, by watching delta and how it changes over time, you can kind of spot the shifts in momentum and prepare for very easy potential reverses or breakouts, which is what I use them for. And you can't see the delta right here. Let me move my face cam. There she goes. The delta up here is what you also saw on my footprint charts right here, the delta. And also will give you the volume of every single candlestick and the volume per specific tick, right? Per specific price point. So why is the delta so powerful, right? Why is this number right here so powerful? So it's kind of like the heartbeat of the market, right? So let's say you're watching a key resistance level. If price is approaching that level and delta suddenly shifts from positive to negative, right? How it's looking right here from 431 to a negative delta. And it's just a very strong sign that sellers are stepping in, right? On the flip side, if delta remains positive and price keeps increasing, it could indicate that a breakout is coming. So if the delta stayed positive as we're approaching these higher prices, it's a great indication that the breakout is coming. So paying attention to delta in context can give you significant advantage of when and what you're planning to trade and when you're planning to take your trades. Now, you can use delta for a number of specific strategies. One good example is just delta divergence, right? A good example is what we're looking at right here of what price is actually doing. Now, looking at a regular old candlestick chart, let me get rid of this. Let me get rid of this. You just see price slowly moving up. How would you know it's potentially going to reverse? Right, here's a great example, right? Potentially going to give you a little bit of a reversal or continue to break out. If you see delta slowly getting smaller and smaller, meaning on a move up, you see 400 positive delta go to negative 1.7K, negative 300, negative 3,000, that's a great indication that the market might start to reverse. After this crazy move up from data, right, 6,000 delta, we see delta go from 37 to 4,000 to then negative 800, negative 7,000, we see price start to reverse on us. Now, another great significance of footprint chart is looking for volume clusters. Look at the number of volume where trades are specifically kind of activated at the most. So a good example is right up here, right, where you see the most amount of volume, because obviously when the market moves volume, so levels where you see significant amount of volume are very good levels for support resistance and just indicates strong interest at that price level. Strong interest means a lot of volume, and a lot of volume are the big smart players, the smart money who actually move the market. Now, absorption is a very key fact as well. And absorption is basically when you see something like this, right? You see big delta, you see large passive orders absorbing all the aggressive buying or the aggressive selling. It's a sign of strong interest at the price level. And this can honestly heavily indicate a reversal, right? So if you see, let's move this. If you see price approaching a key level for you where you're looking for a reversal and you see a positive delta go crazy, if the market does not reward itself to the upside, it's a great indication that all these orders are being absorbed by passive participants and the market then will start making its move down. So Please remember though that footprint charts are not as effective on their own. You need to combine them with many other factors, with market sentiment, right? What is the current market structure? You have to identify your supply and demand levels. Don't just use footprint charts and look at footprint charts 24/7. You're going to drive yourself crazy. Look at supply and demand levels, right? Look at order flow, right? Just confirm momentum and interest, confirm the market sentiment. What's the volume doing as prices are getting higher? What's volume doing as prices are getting lower? What is the current overall market structure? Are we bullish? Are we bearish? And you always have to align your trades with the bigger picture. Zoom out a little bit. What is the market doing in the larger time frame? What is the bigger picture? Remember, the trend is your friend, right? For example, if you spot a delta divergence at a major resistance level on the higher time frame, it's a high probability setup for a short versus on the 5-minute time. But there you have it, guys. Footprint charts are an incredibly powerful tool for understanding market dynamics and improving your trades, entries, and exits. So start practicing with them over and over again. Trust me, with time you will get better at them. Remember not to use them on their own, right? This will make you much more confident in your trading decisions if you keep practicing over and over again with footprint charts. Now, I have a bunch of free videos on imbalances. I have a whole free course on footprint charts that I will link down below in the description. So if you found this video helpful, make sure to leave a thumbs up and just let me know in the comments, what topics you like to me, and let me know in the comments what topics you'd like me to cover next, right? Don't forget to hit that subscribe button and don't miss out on any future videos. And as always, trade smart, stay disciplined. I'll see you in the next one, guys. Take care.